Hi, I'm going to issue a security using an open dime and a pen. All right. So to give you some background, this is on a discussion about whether or how you can tokenize securities. That would be taking a security and putting it on Bitcoin or some other blockchain in the form of a token that trades, or you could even use an actual a regular Bitcoin without doing it. I'll get into without making a token. I can get into details on that also. So this is what an open dime is. Open dime, if you take a look at their website, it's kind of a cool little device. It's a they describe it as a Bitcoin credit stick, so you can put Bitcoin on this and trade it like a dollar or hand it to people, and then you can break the seal open to take the coins off. So it's not usually designed for larger amounts of money. It's designed to be a physical way to trade usually smaller amounts. But I'm going to use it as an example because it's a great, it's a great little tool, and it's also super simple, and it's something that everybody who understands Bitcoin can hopefully relate to. If you can create a securities token with an open dime and a piece of pen or a piece of paper and a pen, then hopefully that simplicity will at least have people understand a little bit more about what a security is, how it works, and how this can work. Hopefully at the end of this, if there's any doubt that I could create a security from these, it will be resolved from watching this. So first of all, let's define what a security is. The definition I like is from Merriam-Webster. It's an instrument of investment in the form of a document, such as a stock certificate, providing evidence of ownership. Okay, that's the definition that really matters the most when we're talking about this. What is the definition that human beings in our language have described as this thing called security? You can make variations of this. There's other definitions. But basically, if you believe that there are a thing called corporations or something similar, including people, and you believe that those people or corporations or entities can make agreements of some sort with other people, corporations, or entities, then you believe in something of an investment contract when they can make agreements for some sort of consideration, such as money. So if I do something and I have a business and I sell food at my business and I promise you a percent for you giving me money, that's a security. And that really is all you need to know about the definition of a security for the purpose of saying, can you securitize a token? Do you believe in corporations? Do you believe in, and I shouldn't say just corporations, because you can have securities by all means that are not issued by corporations. They could be issued by people, by co-ops, all kinds of alternatives to corporations. So if you believe in the concept of having investment contracts and private property and agreements between parties, then you believe in securities. Okay, you may have a slightly different definition, but you would believe in that. If you don't, you probably should stop because you're some sort of socialist or something who doesn't believe in these things, and that's hard to have a conversation with. But if you believe that there are the ability of any entity or individual to enter into any kind of investment contract, or as it says here, instrument for the investment in the form of a document such as stock certificates or bonds, providing evidence of ownership of that thing, then we call that a security. Okay, I go into this in painstaking detail because this is an important concept. You really need to understand what the word is and what a security is. A security is something that can be created in your head. A security is something that can be created by a handshake or by video or by a piece of paper. You better believe that if I look into this camera and say certain words, that those are going to be legally enforceable. Now, I get into this law because not everybody's definition of security includes law. There are ANCAPs and other people who I have a great deal in common with, who don't want to recognize any law. They want to recognize the natural laws of man. Most of those people respect property rights, and they respect the right of individuals to engage in an agreement with each other. So even for you, even if you don't believe in government at all, then that's fine. You can still have a definition of security, and everything I say still applies to this. But because we live in the real world, and this is a $10 trillion market that is heavily governed, and typically agreements in the real world, even a lot of ANCAPs, a lot of minarchists believe that agreements could be resolved by other parties. That could include government or not, could be insurance or private arbitration, but in any event, they believe in this concept of parties being able to make agreements between them. Now, in the real world, those are generally governed by laws, those agreements, and even a lot of libertarians and minarchists believe that it would be a legitimate role of government to arbitrate those disputes and enforce contracts. Regardless of your political philosophy, the reality of the world is that we do have these agreements. There are millions and millions of these agreements in the world where entities, people have agreed to each other. Companies have said, I'm going to give you this percent in exchange for this. It could be a sandwich shop or a hot dog stand, or it could be Microsoft. But there are agreements between entities and between people that say, we're going to give you something in exchange for something else. Or if you own this thing, you're entitled to these certain rights, percentage of profits or whatever. That exists in the world, and generally that's governed by more complex laws than just the dictionary. It's governed by actual laws of human beings. And that would include in the United States and most other countries, many countries follow the United States, that would include the Securities Exchange Commission. They've defined these things in 1933, 1934, and then the Investment Advisors Act of 1940, which has governed me for 26 years. And some of these other laws where they've explained what it is. The big one is the Securities Act, 1933. And American Bar Association has a great, they're a great resource, a little bit easier to read than the SEC stuff. Your very best resource when you're discussing matters of law is to look at the actual laws. Go to I personally will read the actual act, the 33 Act, make my own interpretations of it, try and understand it the best I can, do my own research on the internet, look at what I'm trying to do. Then I go to attorneys. And I've done this many, many, many times for 20-something years, so I've gotten experienced at it, but I would recommend that to anyone. Look at the actual law first, because only you know what you want to do and what your actions are or could be, as well as you do. You can explain to an attorney, here's what I want to do. They may misunderstand, or they may think that you're trying to do something when you really could do it another way. And you'll find exemptions and things like that in the law. For example, if you're looking at SEC exemptions, there are several ways to be exempt from the provisions that cover offerings of these securities. That would be Reg A, Reg A+, Reg S, Reg D. Rule 147, for example, is not used that much, but you may be looking at the law and say, hey, wait a minute, Rule 147, that just means that I'm exempt from these as long as I keep it in my same state. That's really cool. I'm going to do that. Your lawyer wouldn't know that unless you spent a lot more time with him or her explaining your situation. You may not even think, you may be explaining your entire business. You may not even think to say to the lawyer, hey, by the way, I'm keeping this all in one state. And they wouldn't know that you were part of that exemption. For one thing, unless they're a really good lawyer who's familiar with all the intricacies of the law, they may not even know about Rule 147. But if they are a good securities lawyer, they will. But you're not going to spend 10 hours in your meeting discussing what might be and all of these other things. So you're better off reading the laws yourself, making your own interpretation, trying to understand them as best you can, and then going to the lawyers. That last part is very key also, because as a non-attorney, no matter how much experience you have with it, you can be wrong. And many times that I'll look at these, and maybe 3 out of 4 times I'm right, now that I've done it many, many times and been governed by these laws so long. But you still will have something where they say, no, Bruce, you're misinterpreting that. Yeah, it looks like it says this under this exemption. However, here's this other law that supersedes it, or here's the decisions, or here's how it's actually enforced, and these kind of things. And it gets into different gray areas and stuff. But anyway, you go to look at the original laws. These mostly relate to the offering of securities. Securities are trivially easy to create, and there's actually no such thing as an illegal security. What is illegal is the offerings of security. If you wake up in the morning and say, I'm going to create a business, you can create that business in your head. That's a sole proprietorship. That is a security that has stock. Now, it's not relevant in the world because you haven't done anything with that stock. You haven't claimed anything on that stock. If you do, it's still stock. And then it's subject to increasingly more laws. The more money is involved, the more complexity is involved. But you can take a piece of paper, and many businesses, even huge businesses like Facebook, were created not too differently from this. You take a piece of paper and a pen, and you can write down ownership of a structure. So many startups, you sit down with your friends, you say, okay, there's 3 of us starting this startup, we're going to own a third each, and this person maybe gets more because they put more money in, or it's somebody's idea or whatever. That's extremely common, and it's actually more the norm. Many companies are created that way. Not just companies that go VC or do IPOs. That's a very tiny number percentage-wise, but millions of businesses around not just the country, but the world. This is created. And whether you go by SEC definitions, which are pretty much accepted worldwide, or you go with a more broad definition of sort of natural law, human law, and say this is, this is an agreement between people. Whatever your definition, there are people all over the world who maybe don't even know what the word security is, but would fall under this definition. If you have two street merchants in Bangladesh and they do a handshake and say, hey, you have the cart, I have the food, we'll put it together, we'll split the profits. That is a security. If they own 50% of that, that's a security. And if they came to the United States and said, okay, this food stand has invented some amazing thing, and we're going to sell these. I'm going to sell my 50% ownership because I have this verbal agreement. That's definitely a security. It's a little weird, and it's not how things are normally done, but it would be a security under the law. A verbal agreement is a security, and the reason you know it's a security, and at least in the United States, if you're following the law, then you know it's a security because they'll enforce it. So if I said the right things into this video, or I write something here, it's a security. So here's what I wrote. I wrote 100 shares of Bruce's hot dog stand are issued in the form of this contract with ownership designated by this address. And we can have an address that we would put, you can have the open dime, or you can designate the physical open dime. I could write on it, or any number of different things. It doesn't even have to be an open dime. It could be a glasses case or a piece of paper. Here's this Disney certificate. That's all that is. It's just a more advanced form of a company saying this is our, go back to this thing, it is an agreement, an instrument in the form of a document providing evidence that you own it. So this provides evidence you own it. You say, yes, I have this QSIP number, I have this data here, it's signed by the officers of the company, and so on. So that's your certificate with Disney. So you can do the same with an open dime. You can say this is designated as security, and really the only party that matters and who you're trusting in this is the issuer. If Walt Disney says it's a stock, it's a stock. If they say it's a security, it's a security. It is enforceable by law, and if the CEO of Walt Disney did a video just like I'm doing and had these same open dimes and said, here's my board, they're behind me, we're in the boardroom, we are making a resolution. They may have certain things that would prevent the actual logistics of this, how their shelf works and how many shares they have and how they issue it, everything. But believe me, if they set their mind to it, absolutely Apple could do this. They could have their board meeting. They could make a resolution that says the video is binding, and then they make a resolution that says that this particular open dime represents 1 million shares of Disney that's being newly issued. They could absolutely do that. And if they did it on video, and then they took that open dime and they sold that to me for $100 million, you better believe that that's a security. If I brought that video into the court and said, hey, Your Honor, the Walt Disney Corporation issued these paper shares. They also issued this video. I have a video of the board doing the resolution. I have a video of the CEO saying it is done. I have a video of the board saying that the resolution is legally done by video. It's all done under the bylaws of the corporation. And this was it is a legal security, and here I have it, and I am in possession of it. Therefore, I should have it. That's absolutely enforceable. Absolutely. Where would that fall apart? Where would that fall apart? Where would a judge say, no, paper only? I don't care what the board said. That's not a security. The reason you know that would not fall apart, the reason you know it is enforceable, because look at it the reverse way. If I took this piece of paper for my hot dog stand, and I took these open dimes and I started selling them at conferences for $50,000. I said, hey, step right up, get your hot dog stand, shares here. These represent 10% of my company. I'm going to sell them for $50,000 each. You better believe that is a security. That is a security under the definition of SEC laws. They are absolutely going to consider that a securities offering. And it's absolutely a definition of security under a more broad definition of kind of a human law definition. That is a security. A security is an agreement between an organization or person and another. And in most cases, that's a company, and in many cases, it's something like equity. The definition is more broad than just equity. If you go to this American Bar Association, it says any note, stock, treasury stock, security, future, base swap, so on. It's extremely broad. It covers kind of anything you could think of that would be an investment contract. It even says right in here, the definition of security is quite broad and references some Supreme Court decisions and other things. This is interesting. It says most people don't realize that every offer and sale of security is required to either be registered or exempt. So there's three things we're talking about. One is creating securities. Anybody can create a security anytime with something as trivial as a piece of paper. You can create one in your head. You can do one with a handshake. Obviously, the more accurate information you want, there's a lot of holes in this contract. It's not done legally. Obviously, I would never recommend anything like that. The legal documents that I recommend are usually a lot more extensive. Because these are complex areas. But at its basic level, creation of a security is a trivial matter. Every single business, every single sole proprietorship, many people who don't even know that they created a security create a security. If you ever created a lemonade stand, you or someone else owned that business, that's a security, that's a business. Now, the fact that you didn't do anything with it most likely doesn't mean that it's not a security. If you raised money, particularly raising millions of dollars, which subjects you to higher levels of law for that lemonade stand, and whether you did it with a Delaware corporation or a piece of paper as a sole proprietorship, that would definitely be considered a security, which is why most of these token offerings are indeed securities, because this is a very broad definition. Most people and entities are trying to avoid this. Ever since 1933, people have been trying to avoid this and say, "Oh boy, I don't want to be subject to these rules. They're very, you could be subject to jail. You can, it's federal law, very, very serious stuff. A lot of people don't want to be subject to them, so they try to avoid being a security." How we tried to avoid being a security, said, no, this isn't a security. This is orange groves. You're going to use it for the future. The SEC said no. And that's most likely what they're going to say with a lot of these utility tokens, where you said, no, we're not a security, we're a utility, and we're something else other than a security. It doesn't work that way. It's like in the movies when the drug dealers say, "Are you a cop?" And the cop says no or yes or whatever. That's just fantasy from Hollywood. There's no such thing in the law. If it was, then no undercover operation would ever work, because clearly the mafia and the cartels who have billions of dollars at stake and very good lawyers would know this, and everybody would just ask before any criminal act, "Are you a cop?" And they'd say no. So that's just a complete myth, and that's the way it is with a lot of lack of knowledge about securities. You are a security if somebody says they're a security. You can't say some magic words like these. There's these tweets going around now saying, "No, such and such ICO does not offer a dividend, therefore is not a security." That's ridiculous, because saying something isn't a security doesn't matter. What matters is what the law says in the mind of the SEC, or definitions outside of the law, if that's your preference. But that's what decides what's a security. Not you can't just disclaim it and say no, it isn't. And that's what a lot of utility tokens have done in a more advanced way. Some may succeed, and some may actually go so far as to create structures that make it so that it does not fall under these. This is very clever and comprehensive wording, but there's a lot of clever and comprehensive lawyers. And if you figure out something and you're willing to give up some stuff, like the ability to say that this is a portion of your business, then you may be able to qualify as a utility token. But typically you are. These are all about, these laws and the actions that a lot of people take are all about trying to avoid this. If you say absolutely this is a security, absolutely this is equity, I am under the definition of securities laws. Here's a piece of paper to prove it. Here's a video that proves it. Here is the security right here. And you say that, and somebody has it on video, or you put it in legal document form with or without an attorney, it's absolutely a security. It's going to be considered a security. It's messy paperwork, but it is a security, and the SEC or any other regulator, or pretty much anybody who uses this definition, is going to consider it a security, and they're going to have the same legal rights and the same rights and privileges that you would have if a company issued another form of security. So there's nothing to prevent Disney from issuing a security in this open dime or issuing it by a Bitcoin address. They could do that same shareholder resolution and say the owner of address 1H3-5 whatever is entitled to X shares. Wouldn't be a great mechanism to do it because you'd have to account for, well, what if they want to transfer it to somebody? Would you say whoever owns the private key, or would you ever say that address or address the future? You could. That's where the contracts get more advanced than this. But at its very base level, it wouldn't be a great idea, but it would be a legal security, and it would be legal, and it would exist, and it would be property as recognized by the entire world. Now, as far as the real world goes, there are trillions and trillions of dollars in assets that are in this sort of scheme that basically works under these definitions of the SEC law, where they say, here's an issue where we are saying that this is a security, and they have an agreement with those users. There's absolutely no reason that can't be, described by those issuers as represented by a glasses case or a piece of paper or an agreement or an open dime or an actual address on Bitcoin or Ethereum or whatever platform you choose. So there shouldn't be any question about it. I'd be curious for skeptics to say, where does this fall apart? Do you think, can you get a lawyer? Do you believe lawyers are an authority on what a security is? If not, get an English teacher. Whatever you believe, if you believe in this word of security, get a lawyer or an English teacher to say, okay, I watched Bruce's video, and especially a lawyer, say, I watched Bruce's video, I'm convinced that no matter how many open dimes he sells, no matter what contract he has, and how much he sells them for to whoever, it will never be considered a security. You get me a lawyer from a reputable firm to write that letter, I'd be very interested in reading it. The fact is, these are unquestionably securities. They are securities by any definition of human language. They're securities by any definition of any legal system in the world. They are securities because the issuer is saying they're securities, and that trust pattern is all that matters. Now, whole different matter, you can say, well, in that case, you don't need a blockchain because you're already trusting, but I've done other videos that explain why that's not the case. The realities of the way that trading works are so complex that you do need a blockchain, or you need some other system that solves complex issues of trusted parties, parties who don't trust each other, which is a Byzantine general's dilemma, which is, there's not a lot of ways to solve that, and a blockchain is, in this particular case, is one way to solve it. And the other thing I can talk about that you could say is that I could do some other videos on is this sort of concept of is it an advantage? Is there anybody asking for this? Wall Street seems to work just fine. I could do a video on that. You'd have a lot of advantages of this kind of system. You'd be able to trade better. There'd be more liquidity. You don't need to trust these parties. Right now, you have to trust parties to run these ledgers. It's extremely complex. I've done other videos on it. It's a whole nother topic. So there's a lot of advantages of this. There's a lot of reasons it makes sense. There are a lot of reasons that a blockchain makes sense. I don't expect you to be convinced in this video, but at least at this video, hopefully you are convinced that yes, you can issue a security and have it be tokenized. Anyone can issue a security and have it be represented by anything that they want. And so yeah, you can definitely do it. And by the way, it's been done. There are securities. I issued a real security. This is just a test. My real security wasn't much more advanced. It was the same paper that I wrote it on. I issued a real security a few weeks ago. You can issue a security in token form. And I would challenge anybody to watch that video and say why it's not a security. Either they have a different definition than the dictionary and the law, or they somehow don't think that Bitcoin is a secure network or that counterparty works or whatever. Those are two pretty solid things. The definition of security is a pretty set thing. You can talk about something else. You can say you don't believe in securities, I'm a socialist, I don't believe in property, whatever, that's fine. But in the world, there's a thing called securities. And if you believe in that definition, what I just described here is definitely a security. And what I described in the other video is definitely security because I used a real corporation that has real value. So there's no question that Atlantic Financial Chainstone Labs is a corporation and it's a security. It has significant value. And I tokenized it with this counterparty token. So the only other thing is that technically possible? Did I really make a counterparty token? Well, yeah, you can see it on the blockchain. You can see that the token exists. And you can maybe say it's not secure or Bitcoin could be hacked or whatever. Those are separate matters. I believe Bitcoin is a secure network at the time that I made that counterparty token. and the evidence backs it up, and it backs up the fact that a security was created. It is a security under the laws of language and man and securities law globally, and it is technically possible, and it was done, and it can be done again. It can be done on open dimes. It can be done directly with Bitcoin addresses or using Counterparty or any number of other projects that specialize in this area or allow the issuance of tokens. So hope that answers questions. Thanks.